Hello, I'm Klaas de Vries, Associate Economist at the Conference Board, and this is your January Economics Watch Brief for Europe. What can we expect from growth this year? The euro area economy will continue to moderate, which is mostly related to a weaker global growth environment. Domestic demand is stable at just over 1.5% annual growth. We don't expect this to change substantially this year, as the labor market as well as business lending conditions are still favorable. The European Central Bank has signaled it is committed to keep monetary policy accommodative, and the first rate hike is only expected towards the end of 2019 or later. Which European economies pose the biggest risks? While Germany posted negative growth in the third quarter, this was mostly due to temporary factors, such as the bottlenecks in automotive production, as well as adverse weather conditions. As these factors subside, the German economy will return to a more solid growth path. This is a reassuring perspective for the entire euro area and especially for neighboring economies such as the Netherlands, Austria and Denmark. Civil protests in France in November and December over economic reforms may weigh heavily on the growth results for the final quarter of 2018. A resolution of the protests should lead to the French economy resuming its growth path in the first quarter of 2019 onwards. In Italy, while the dispute between Rome and Brussels regarding the public budget has subsided, the economy is not expected to bounce back. The risks of a downturn in 2019 have increased, in contrast to the more stable outlook elsewhere in Europe. The same may be assumed for the United Kingdom, especially in case a no-deal Brexit is not avoided. Despite the moderate outlook, the unemployment rate in the euro area has remained stable at 8.1% since the summer of 2018. With unemployment reaching a decade low, companies feel the pain of talent shortages, especially in an aging labor market. Sectors such as payrolling, transportation and computer services are among the worst affected by labor shortages. As the economy keeps growing above its potential rate, we don't expect these shortages to fade away in 2019. Consequently, wage pressures have been rising in recent months and are likely to impact on business profitability. I am Klaas de Vries, and this was your Economics Watch Brief for Europe.